This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Pashurdaves. Thanks for joining us at XM.com. OPEC and its non-OPEC partners decided to cut oil production by 2 million barrels per day on Wednesday in a bid to stem the decline in prices. The reduction is double the 1 million barrels per day that was initially suggested, but oil futures already rallied significantly once the reports of 2 million began to circulate, and thus the announcement was met with a buy the rumor, sell the news response. However, there are also doubts as to how much of an impact the new quotas will have on actual production, as many OPEC members have been underproducing for months amid capacity constraints. With inflation so high everywhere, the decision couldn't have come at a worse time for the global economy. The reasoning by OPEC Plus that demand is weakening due to a slowdown in the major economies is not entirely plausible, as many countries, particularly European ones, are switching from gas to oil, and so the demand outlook isn't quite so clear. Stocks, meanwhile, were surprisingly buoyant on Thursday, with investors unfazed not only by the prospect of higher energy prices, but also from the latest set of economic gauges out of the United States that dampened bets of a policy shift at the Fed. The S&P 500 reversed earlier sharp losses to end Wednesday's session just 0.2% lower. A rebound in Treasury yields weighed on the market, though U.S. futures were steady on Thursday and European shares were mostly positive. Solid readings in the ISM non-manufacturing PMI, as well as the ADP employment report yesterday, dealt a blow to expectations that the Fed might begin slowing down the pace of its rate increases. The U.S. dollar was slightly up against a basket of currencies on Thursday, having come off its highs yesterday. Recession fears continue to dog the euro and pound, with their recovery against the greenback likely having gone as far as it can for now. German economic data keeps going from bad to worse, and the EU's latest package of sanctions against Russia raises the odds of Moscow completely turning off the gas taps to Europe. In the UK, Prime Minister Liz Truss said little to reassure investors in her party conference speech that the government has a grip on the country's finances, or that she is doing enough to unite an increasingly divided Tory party. This was today's Daily Market Comment. Thanks for joining us at XM.com.